think you've seen all the surprises this market has to offer, think again. Our next guest is laying out 3 market hotspots that could catch investors off guard. Let's go off the charts with Chris Verrone of Strategas. Chris, what are you watching?
Hi, Melissa. How are you? I think investors better get ready for a couple surprises this year. I want to start with bond yields. And listen, we've all seen bond yields go up over the last number of weeks. We've pushed through 1%, an important technical breakout. Frankly, it's pretty easy to make a case that they want to go to 135 or 140. But I've never seen bond yields obey what the consensus actually wants. And I think when you look at some of these charts here, resistance at 140, but look at the distribution that we've brought along on this second chart, a distribution of where the sell side believes 10-year yields will end the year. Only 4 of 58 analysts out there believe 10-year yields will exceed 150. So what's the surprise here? I think you can get a 2 handle on 10-year yields at some point this year. The street is not ready for it. Second surprise. Let's talk about the dollar. And I think this goes hand in hand with the yield call. If you're going to get bond yields meaningfully higher, that creates an attraction for capital flows into the U.S. Everyone is a dollar bear. And I think we need to be very, very mindful of how lopsided sentiment has gotten on one side. Our dollar survey shows one of the highest levels of bearishness since 2014. We have seen these coincide with dollar rallies in the past. I don't think it would be a shock over the next number of months to see DXY bounce, perhaps back to that 93 or 94 zone. That would be a pain trade for a lot of people in this market. And it brings us to what I think is the third surprise, energy. More than just a trade. Every time people talk about this sector, even the bulls, it's described as only a trade. We think it's more than a trade. We think a durable period of improvement is underway in this sector. You have 80% of the energy sector in an uptrend. That's one of the best readings we've seen in years. That tends to precede future gains, future leadership. I think that's starting to build here. And what I would really emphasize within the sector is owning the average stock. There are 3 names in the sector that comprise 50% of the weight. That's too concentrated for us. Go down the cap scale, own the average energy name. That's where we think leadership is found. So rates, dollar, energy, 3 surprises for 21.
All right, Chris, thank you. Chris Verrone, got a lot to talk about regarding these surprises. Pete, which surprise do you think has the highest likelihood of happening?
I'm going to go with energy, Mel. And as a matter of fact, my exposure to energy is very, very high right now. And a lot of these beta type names, those next level down names. So for instance, I own Exxon, the stock. I own Chevron in stock. But in terms of calls, Marathon Petroleum, Marathon Oil, Occidental, those kind of names where I think you're getting a lot of beta. So in other words, you're getting a lot of bang for your buck. I don't think it's over. I still think there's more upside. And we've watched the price of crude go from 38 to 53, 54 in a hurry. And I don't know that I see any signs of stopping there. So I think that Chris is right. And I think energy still has a lot more room to run.
Grasso, same question to you.
So I'm going to go with the 10-year because the basis of me moving from growth to value has been rates increasing. The 10-year on a percentage basis is up 126% from its August low. So I like his dollar call. I like the energy call. I think energy is going to have a problem with ESG. That's a main problem. That's a main headwind. But yesterday, Tudor Pickering was out bullish on a handful of nat gas names. SWN, RRC, they were out on three other names. They're coming from such a low base, Melissa, that they can double, triple, and quadruple and still be just out of single digits, a lot of these names. So I think energy can run a bit, can surprise a lot of people, but I think the 10-year is going to run a lot further than people think.
Just quickly on the dollar, we've talked many times about how consensus is that the dollar weakens, and there is a constellation of trades that have been built around this thesis of continued dollar weakening. If Chris's surprise comes true, Tim, which trade is most vulnerable?
Well, first of all, one of the trades he just mentioned, like if the dollar rallies a lot, energy's, I think, going to be under pressure. And if the dollar rallies a lot, I think actually yields are going down. But that, I think Chris does a great job and all the stuff he talks about. But of the other trades, obviously, resources and reflation trades in a higher dollar and especially emerging markets. If the dollar goes to 95, I'm very bullish EM. I know Mike Coe's on the show later to talk about that trade. I think that trade would suffer a bit. But again, a move to 94 is a bit of a bounce, but I think that's more than a bounce. I think a move to 91, 92 just sets you up for this trade to go weaker. I think the trend in the dollar remains weaker. I know it's crowded, but I think there's a reason for that.
Shepard Smith here. Thanks for watching CNBC on YouTube.